I want to teach you a trading strategy to use in 2026. This is powerful, this is accurate, this is what you need to make consistent profit. Just make sure you watch this video until the end and let's get started. But before we start, if you like my contents, please support the channel by liking the video and subscribing to my channel if you haven't subscribed yet. Alright, in this trading strategy, we have RSI and we have 4 exponential moving averages with special settings and combinations that work like magic. First, let's add the moving averages. Here we click on indicators and we search ribbon. This one, moving average ribbon. When you add this indicator, 4 moving averages are added to the chart. But we need to change the settings and adjust it based on our trading strategy. So here we go to the settings of the ribbon, and first here in the inputs tab, here for the type of moving average, we set EMA for them because, as I said, we need exponential moving averages. Then here for the first EMA, we set the length at 5. For the second EMA, we set the length at 8. Here for the third EMA, we set the length at 89. And for this EMA also, we set the length at 89. Then here for the source of calculation, for the first EMA, it should be based on close. For the second EMA, also based on close. For the third EMA, it should be based on high. And for this EMA, it should be based on low. So here we have 2 exponential moving averages with the same length of 89, but one of them based on high and the other one based on low. Alright, now we need to change their colors. Here for the first EMA, we set the color to white. For the second EMA, we set the color to orange. For the third EMA, we set the color to green. And for this EMA, also we set the color to green. And finally, we go to the style tab and we increase the thickness of the lines so they will be better visible on our price chart. Alright, we're done with the settings of the exponential moving averages, and now we need to add RSI. So here we click on indicators and we search RSI, this one. And for RSI, we also need to change the settings. So here we go to the settings of RSI, and here in the style tab, except RSI line, we remove everything else that we have here. And here for RSI line, we change the color to white and we also increase the thickness of the line so it will be better visible on our price chart. Alright, we're done with the settings of RSI, and now let me teach you how you can find trading opportunities based on this setup. But before that, I'm proud to announce that recently I published a book, The Art of Price Action Trading, which is a complete guide to price action analysis. The link is in the description and you can get it later if you want to master price action trading. Alright, this trading strategy is a reversal strategy, which means that we want to find the reversal points of the market where one trend is ending and another trend is forming, and we want to find a low risk trading opportunity to enter a trade when a reversal is really happening in the market. And we're going to use these 4 exponential moving averages and this RSI for this purpose. If you remember, these green lines here are EMA with length of 89, which one of them is based on high and the other one is based on low. You can see that they have created a channel on the price chart. From now we call it green channel. So we're going to use this green channel for early signals that give the probability of reversal. But this is not enough, and we're going to use also RSI divergence for spotting leading signals of reversal. And then by the help of this orange line and white line, which are EMA with length of 5 and 8, we try to find a perfect trading opportunity to enter a trade. In this trading strategy, we have different layers of confirmation to decrease the risk as much as possible. Let me show how you can do it. Alright, in this trading strategy, in the first step, we use the green channel for early signals of reversal. Basically, when the price is above the green channel, we consider the market is trending up, and when the price is below the green channel, we consider the market is trending down. So crossing of the price above the green channel or below the green channel can provide a signal that a reversal is happening in the market. But we don't enter a trade just based on this crossing. It is too much risky risky and we can encounter many false signals, and that is why we have other layers of confirmations in this trading strategy. For example, here you can see that the price from below the green channel crossed the green channel and went above the green channel. This is an early signal that a reversal is probably going to happen, but we need also confirmation from RSI. As you know, RSI divergence is a leading signal that gives the probability of reversal when the price crossed above the green channel. Before that, we find the lowest level of the price in the prior trend. Here, we should have a divergence. You can see that the price made lower low, but RSI didn't follow and it made higher low. This is a bullish divergence and gives the probability of reversal. If there is no bullish divergence before crossing of the price above the green channel, we don't take any action anymore and we just wait for the next crossing of the price below the green channel, which would be a short position setup, and I will explain it later. So here, until now, we have two signals of reversal. The price crossed above the green channel, and before this crossing, we had a bullish divergence in RSI. Alright, in the next step, the orange line and the white line should also go above the green channel. Because the orange line and white line have short length, they are near to price action, and shortly after crossing of the price above the green channel, they are also usually above the green channel, but not always. So this is also the next step in our trading strategy. We wait for the white line and the orange line to completely go above the green channel, but we don't enter a trade here. We want to be more confident and say with higher probability that a reversal is really happening. So in the next step, we should wait for a pullback, and the orange line and the white line can help us on this. We wait for the white line to go below the orange line. This shows that a pullback is forming on the chart. In the next step, we should wait for a signal that shows end of the pullback, and that is when the white line is closed above the orange line. You can see that when this candle is closed, the white line is already closed above the orange line. So the buy signal here is confirmed, and in practice we could enter a long position at this point with the stop loss below the green channel and profit target at risk to reward ratio of 2. Please pay attention that this is a reversal trading strategy, not a trend following strategy. So we don't enter a trade in the next pullbacks. In this trading strategy, we only focus on the first pullback after having the other conditions that I explained. Alright, now let me teach you a short position setup. For a short position setup, we wait for the crossing of the price from above the green channel to below the green channel. Here at this point, you can see that the price went below the green channel. The next condition is having RSI divergence. This is a short position setup, so we find the highest high of the prior trend, which is at this level, and here we should have a bearish divergence. You can see that the price made same level, but here RSI didn't follow and it made a lower high. This is called bearish divergence, and it gives the possibility of reversal. So until here we have two reversal signals. The price went below the green channel, and before that we had RSI divergence. Alright, in the next step, both of the white line and the orange line should also go below the green channel. You can see that here the white line is below the green channel, but the orange line didn't go below the green channel. And again, the price went above the green channel, as you can see, but we didn't get other conditions of a long position setup, and you can see that again the price went below the green channel. Before this crossing of the price below the green channel, you can see that the price made approximately same level or a little bit lower, as you can see, and we still have RSI divergence based on the previous high level of the prior trend. So we still have two reversal signals, and from here when this candle is closed, you can see that both of the orange line and the white line are also completely below the green channel. Alright, now in the next step, we should wait for a pullback. We should wait for the white line to go above the orange line. This shows that a pullback is probably forming on the chart. In the next step, we wait for a signal that shows end of the pullback, and that is when the white line is closed below the orange line. When this happened, it shows that the pullback probably ended and the price is going to decline more. So here the sell signal is confirmed, and in practice we could enter a short position at this point with the stop loss above the green channel and profit target at risk to reward ratio of 2. As I mentioned earlier, this is a reversal trading strategy, not a trend following strategy. So we don't enter in the next pullbacks and we only focus on the first pullback after having the other conditions that I explained. Please pay attention that we can have a case like this where the pullback is just very small and there is no crossing of the white line and the orange line. In cases like this, you can use price action analysis for finding end of the pullback. For example, here you can see that we had a pullback of the price to the green channel. The price shouldn't go above the green channel in the pullback. That would be a case for a long position setup. So here, when the price did the pullback, you can see that there is no crossing of the white line above the orange line. So we mark the previous swing low and we wait for breaking of this level. When the price goes for a pullback, before that a swing low is created. In long position setup, it would be a swing high. Here this swing low can act as a potential support level and we wait for breaking of this level. Here you can see that by the help of this candle, this level is broken. So in practice we would enter a short position here at this point with the stop loss above the green channel. But you can see that the price declined small amount down to this level, not reaching to the expected target of risk to reward ratio of 2. But in practice, based on our trading strategy, we wouldn't enter a trade here because in the early steps of our trading strategy, after the price crossed below the green channel, before that we didn't have RSI divergence, so we wouldn't take any action here. I just wanted to explain the cases where the pullback is very short and there is no crossing of the white line and the orange line, and how you can show flexibility and use a price action concept to identify end of the pullback. Please pay attention that there is no trading strategy or method with 100% win rate. This is not possible in reality. Losing positions are always part of the game and you need to manage your risk properly. There is a risk management strategy that is called 1% rule, and it is one of the best risk management strategies that you can use. I have a complete guide on this. The link is also placed in the description and I highly recommend you to watch it, because without a proper risk management strategy you cannot become a consistently profitable trader. Alright, that's it. Thank you for watching this video. If you have any questions, feel free to ask and leave a comment for me. I'll answer your questions as soon as possible. If you haven't subscribed to my channel, please subscribe and hit the bell so you get the notifications of my new videos. See you guys in next video and good luck with your trading.